Hello, hello. Welcome to my first ever Homebuyer Seminar. Going to be going over some awesome information. I'm going to try to keep this very short and to the detail. I can talk about this stuff for hours. But the first thing I wanted to go over is how to get started. The first thing I get, usually is a phone call from a client or a realtor refers somebody over. So everyone comes over in a different way. Sometimes it's more education before even starting the application. Some people just want to give it a shot. So the first step is submitting an application. That we always suggest, and when I say we, is loan officers, me and my team, but we suggest to submit an application. And the reason being is because once you do that, then we can pull credit, review your work history, and really get everything in detail. That way we can give you a solid answer. Sometimes clients will reach out to us and say, hey, do you mind just not pulling my credit? And so, of course, that's always an option. The only thing is it's not going to be as accurate, right? And we don't like to have any upsets for our clients in a case where, we end up pulling credit and things change. So application is always great to start. And then we have to collect documentation. What we want, as far as documentation, what we want is, pay stubs, bank statements, W-2s if you are a W-2 employee. If you own your own business, you want tax returns, and so forth. So everyone is a little bit different when it comes to income. We just have to understand, what you do for a living, and then we can tell you what we need. But we do need some documentation. The first thing I can break down is pay stubs. We want to see how much you make, if you're hourly, salary, commission, bonus. The reason for that is if you do have a pay structure that is, let's say, salary or even hourly, but you get bonuses and overtime. The reason we ask for pay stubs, we want to see what's there. And if we see anything extra, we'd like to ask you, hey, can you provide 2 years history of that? And usually if you get year-end pay stubs, that'll help us break that down. We don't have to reach out to your employer. Usually doing that, we send out a verification of employment, and we'll break down all of the income you received. We could save some time, though, if you send us your year-end pay stubs. Bank statements, pretty self-explanatory. We just want to know how much money you have in the bank, and if there are any deposits or anything kind of funky going in and out. Everyone nowadays, is in crypto, might be flipping things. Everybody's got something going on where money's moving, and unfortunately, underwriters question any type of movement or deposits, withdrawals. So we have to explain all of it. And then the other thing would be tax returns on the self-employed side. We want to know, if you're 1099, if you have a corporation, we need to know all of those because, again, we want to see that you have had history of receiving that income. So that's basically what we need for documentation. Now, the actual pre-approval, we basically would get your application, your documents, and then we would issue a pre-approval letter once, we call you and go over terms. Hey, here's the program that we feel you fit in. Here's, a 30-year loan. We go over all those details, and then we issue the pre-approval letter. Once you have that, it's good for 3 months. And the reason I say it's good for 3 months is because from there, you are going to, the only thing we're really going to need to do after 3 months is pull credit again. Everything else is still pretty good as long as there aren't any large purchases, any big job changes, everything's fine. So yeah, once you get your pre-approval letter, you're up and running, you're ready to go, shopping. Let's go to the next slide. So loan programs. Again, I'm gonna try to keep it, quick and detailed. So conventional, lowest down payment option is 3%. We always recommend, me personally, I recommend 5%. Mortgage insurance is usually a little higher. Payments are a little higher, but again, if that's all you got, 3%, then hey, that program's available, right? Minimum FICO 620. When interest rates were a little lower, it was definitely a good option, but at 620, you're going to be seeing a pretty high interest rate. So again, we'll discuss that, how to get around that. If you do have a lower FICO, how we work around that. Now, the max loan amount there I have for conventional is for Riverside County and San Bernardino County. In one of the other slides I have coming up, we can go over that. But um, VA loan minimum down is 0%. So if you don't know, the VA program does not require a down payment. So that's it's a great option for veterans. And so your minimum FICO, you want to it says 560, but we want to be between 680 to 700. We can go lower. VA will accept it, but again, once you start getting to that lower FICO, it's going to be a pretty high interest rate, and there might be points, right? FHA, it's a great program. The only thing that is a little tougher with FHA compared to conventional is the appraisal. Appraisers on the FHA side are going to be a little more picky, because the FHA program really is a true first time buyer program. And so in their eyes, they really want you to come in with, they want you to come in with your down payment, your closing costs. You can negotiate that, but they want you to come in with as little as possible. You wouldn't just move in and not have to do too many repairs to the home. Where conventional, it's a little more loose on the appraisal. So I always ask, my clients, you guys looking for a little bit of a fixer upper? If they say yes, then I'll let them know conventional is probably going to be a better option because FHA is pretty picky. So yeah, it's the basics for that. Down payment assistance, that's a very popular topic. There is CalHFA that is they're the most popular down payment assistance organization. They have been around for years. Every county, city, bank, different people have their own down payment assistance programs, but I would say the king of them all is CalHFA. Very, very popular. CalHFA has an amazing website. Anytime somebody reaches out to me with questions, their website is very easy to navigate. So, when people ask me for these different programs, we have a program that's coming up. A lot of people have been marketing that you get a 20% down option, and it is shared equity. So if that is something that you're interested in, just reach out. I can give you all the details on it. But yeah, CalHFA is a really good program. They have, many years of, doing these kind of programs, and they're solid. They're very good. Again, there are different programs available through them. So if that is something you're interested in, please reach out. I can go over those, but it'll start from 3.5% down. They can help with some closing costs. So, you can come in with 1 to 2% of the purchase price. In some cases, you might get a little bit of money back at the end. It's a case by case. And then again, it goes from there all the way to the 20% down shared equity program that's coming out, I would say, in the next week or so. And then let's see what else we got. So loan limits, that's something I wanted to go over. Again, this says OC, says Riverside, LA, we do loans everywhere, in all, other cities, other counties, other states, but this is primarily where I work out of. And so I wanted to go over this because this, depending, if you're in another state, these rules still apply. Every, loan amount's different, but, it's just something to watch because when I usually help clients buy, um, I see that sometimes if somebody's in one of these counties and they're very close, like let's say Rancho's really close to LA, let's say Corona's really close to, it borders Orange County, Temecula, that's getting down to San Diego. So when you start to go back and forth from these counties, sometimes you don't realize, well, I'm in another city, I'm in another county. Well, the loan limits change. And I can't tell you how many times people come from um, a county that has a higher loan limit into Riverside or San Bernardino County, and they have lower loan limits. So Orange County on the left, it has a loan limit of $1 million for conventional and FHA. In the middle is Riverside County, and you can see that those loan limits are a lot lower. What this means is if you are pre-approved in Orange County to go up to $1,089,000, and let's say you just don't find anything, and you're on the internet and you say, wow, look at this beautiful home for $1 million in Riverside, so you start to shop there. It's a huge difference because the max loan you can borrow in Orange County was 1,089,000. But in Riverside, the max for conventional is 726, 200, and for FHA, it's even lower. It's 644. So on the left and the right, you could see the neighboring counties. Big, huge difference on loan amounts. So something to be careful with if you're shopping from county to county. Let's see, what do I got here? So yeah, once you get your pre-approval letter and you are now shopping, um, the thing is, it's really good to have communication between your realtor and your loan officer while you're doing this. And the reason that I say this is every property is different. If we quote a payment, if we quote a program, things can change. So, for example, if you get an FHA pre-approval letter and you are shopping as an FHA buyer and you find a condo, you say, you know what, I don't really like any of the houses, but this condo is pretty nice. It's a good starter place for your current living situation. Let's say no kids, maybe you do have kids, or you're single, whatever your reasons are to go and cross over to just single out just condos. Well, the thing you have to know is not all condos are FHA approved. So the association, usually when condos are built, the builder has condos approved as FHA so more people can buy them. Once that expires, because it does expire after the condos are built, the HOA doesn't have a need to renew it. And so now those condos will become no longer financeable by FHA terms. So that could expire. Now we do offer spot approvals, so that's something good to know, right? If you are looking at condos and your realtor saying, "Hey, they just won't go FHA," there is an option for a spot approval. But again, that is an example of why you want to communicate with your realtor and your loan officer as you're shopping. I can't tell you how many times the realtor might just send us over a contract and I'm like, hey, I didn't get a heads up on this, what's going on. And so then I start to see that, now as an HOA, in the pre-approval, we never discussed having an HOA payment. So always have communication between the realtor and the loan officer on what you're shopping for. I know for me and my team, we run a lot of scenarios for our clients because, more than ever, it's important to find out where my payment's at, where your payment's at. And so, nobody likes surprises. So as you're shopping, you want to have that communication with all parties. Once you get your offer accepted, you're off to the horse races. We end up submitting your loan into underwriting. Now, some loan officers will explain to clients, well, we got your loan fully underwritten and approved. So in most cases, some loan officers might not do that in the beginning because what they do is, if it's an experienced loan officer, truly they are the underwriters. They are supposed to know all the guidelines. They're supposed to know if this is going to work, if it's not going to work. So at that point, we notify our clients when we get an offer accepted, hey, we're going to submit your loan to underwriting. Now, when we submit to underwriting, we're not expecting to hear bad news. We have already done our due diligence, with our team. We figured out all the income obstacles, if there are obstacles, but we basically have ironed everything out. So when we go into underwriting, we basically, let an underwriter go ahead and put a stamp of approval on it. That'll let us also order the appraisal. You'll have to go to the bank and, deposit your earnest money deposit. Every deal is different. Most of the time it's 1%. So if the purchase price is, let's say 500,000, usually the agreement is you have to put a 1% deposit. And so when you do that 1% deposit, we also do count that towards your funds to close. So if you are, supposed to close or bring, let's say 30,000 to close at the end, we can also include that 5,000. So, I get that question a lot when we open escrows, like, hey, I put in that deposit. Does that count towards? It's like, yep, definitely does. So yeah, once we go ahead and get the loan submitted, we order the appraisal. You make your earnest money deposit. We will have to wait for an appraisal to come back, and then you will be doing your inspection with your realtor. So Most contracts in most markets have been about 17 days for you to do your due diligence. So we're going to wait for the appraisal to come back, inspections, underwritten approval from the bank. So you should be getting all of that done in the first 2 weeks. And in most cases, buyers can close quickly, but sometimes the seller might need a little bit of time. So us as a team, once your offer is accepted, we will be moving fast to make sure everything's getting done in a timely manner. Our goal is to get everything done, and if there's a little bit of time, well, then we sit and wait, and that you have, your loans ready to go. So again, trying to keep this short and to the point, but that's usually the process after you get your offer accepted. If you have any questions, again, I have zero issues if you reach out and you want to go in depth on any of this stuff. Um, it is a lot, and I like going over details to make sure that you understand the process, you understand loan programs, loan limits. So if you have any questions on any of this stuff, I know right now is a interesting market to navigate as a buyer. Also sellers, sellers need to know, hey, what can I get? Where's my payment going to be on the next home? So if you have any questions, here's my contact info. Please let me know. And yeah, I hope you enjoyed, and hope to hear from you. Take care.